What are the mistakes, David? Welcome.
Great. Thanks for having me. Look, I think that they are making the same mistake they've been making for the last couple of years. And look, I'm going to simplify this. Think just big picture. Inflation has been going on for a long time in the asset markets, right? Housing, stock market, et cetera. And as it drifts further down sort of the ladder to food and oil and other goods, all we're doing is increasing the income inequality gap. And the pain that we're putting on the working class while the rich get richer is only going to make the Fed's job harder as people feel more and more disenfranchised. And a lot of things in our economy that used to work smoothly, like not as many cancellations or delays in your flights, are going to stop working that well.
Yeah, I mean,
and it's a bigger macro problem that I think most people are seeing.
Yeah, for my part, I worry a little bit about the price of stuff you can't really substitute away from, whether it's healthcare, childcare, in some ways, parts of education, right? That, once those prices go up because of labor shortages and wage hikes and all the rest of it, I mean, people often really don't have a choice. They're kind of just stuck in the squeeze that you're describing.
Right. And they've got no choice but to demand higher wages. Right. And that's something that the Fed is not going to be able to dampen down once I think this inflation monster just continues to grow. I think they just keep turning a blind eye to these bigger inflationary and income inequality problems. And it's going to come home to roost in a big and bad way.
David, I think now it's fashionable vogue to say that, the Fed was behind the curve, that they made a mistake, that they missed, that they whiffed on the wiffle ball. But if I look back to a year or 18 months ago, I don't remember many market analysts, economists, swamis. I don't know what you were predicting in, say, March of 2021 on inflation. But most people were going along with the consensus view that it was going to be transitory and not as high as it is. Would you comment on that?
Yeah, look, I don't know how well my crystal ball was working back then, Tyler, and I don't know if we've made as many comments around macro picture. It's not really our focus at New Constructs. It's more around the underlying fundamentals of individual companies. But I do think, no one can get around understanding the larger market context of investment and decision making. And one of this really telltale signs for us in terms of seeing just how off markets are and the Fed is in some of these zombie stocks. I mean, these companies that are profitless, super high valuation, probably have no prospects of ever making any money. And as long as the Fed is allowing a capital markets system to function in a way that allocates huge amounts, billions and billions of dollars to these companies, who in turn siphon it off to individual executives, right?
And so name some of those. Name some of those. You got me going now, David. You got to name some of those companies. What is an example of a zombie company that has done what you describe? In other words, raised huge amount of capital. Maybe it has gone to enrich executives. Maybe it's gone into money heaven. Who knows? Who are they?
Well, to the boards of directors, to the main investors, right? No, I mean, Rivian, Freshpet, Coin, Robinhood, Carvana, Tesla, Peloton. We just published a list of a bunch of these stocks here in the last few days.
Tesla's a zombie? Hasn't Tesla made money?
Tesla, yeah. Are they going to continue to make money? We don't know, right? I mean, and I think when it comes to zombie stocks, right, you got to keep in mind that like the amount of loss that could be incurred by the owners of the stock at its current level is devastating, I think, to folks. And I think when the unwind hits, it's going to be really painful across all those.